Welcome to our Crypto News Weekly Roundup. Let's explore the key stories that made the headlines in the cryptosphere this week. Ark Invest dumps Coinbase shares. Ark Invest offloaded $33 million worth of Coinbase shares in December, following a bullish rally. Coinbase records notable gains in market share amid Binance's regulatory troubles. Coinbase has emerged as one of the biggest gainers of new users as Binance lost market share after its record settlement with the DOJ. November sees massive crypto exploits. Immunefi has reported that the crypto market suffered over $340 million in crypto exploits in November, setting a new record for the year. AntPool agrees to refund $3 million in Bitcoin transaction fee error. AntPool has agreed to refund a record $3 million in a mistaken Bitcoin transaction fee, as long as the victim can prove ownership. Let's explore all these and more. Ark Invest has been making headlines recently for its stellar performances in November, when its flagship fund, the Ark Innovation ETF, gained 31%, its best month on record. The fund invests in companies that are disrupting their industries with cutting-edge technologies, such as Tesla, Roku, Shopify, and Spotify. But what's even more interesting is what Ark Invest, one of the biggest investors in Coinbase, has been doing with its Coinbase shares as of late. In the past month, Coinbase's share price has surged by nearly 75%, reaching a new record high of $147.8 on the 5th of December. This coincided with a rally in Bitcoin, which gained 15% in the first week of December, touching $44,500 for the first time since April 2022. So what did Ark Invest do with its Coinbase shares? Well, it offloaded significantly. According to trade filings, Ark Invest sold 237,572 Coinbase shares worth over $33 million across 3 ETFs on Tuesday, December 5th. This was after selling around $5 million worth of shares just the week before on November 28, and offloading more shares in March and July this year. But does this mean that Cathie Wood has lost faith in Coinbase, like some crypto enthusiasts are speculating? Well, not necessarily. Ark Invest has a strategy and a habit of selling into rallies and buying into dips. This way, it rebalances the weightings of its funds to be more profitable. This strategy can be seen across its previous sales, as they all corresponded with notable increases in the price of Coinbase shares. So don't be surprised if Ark Invest sells more Coinbase shares soon. It's all part of a balancing act. Now, despite all the offloading, Coinbase is still the largest portfolio composition for Ark Invest, with $1.2 billion worth of shares in its holdings as of the time of this video. Apart from Coinbase, Ark Invest also recently liquidated 168,000 Grayscale Bitcoin Investment Trust shares, yielding $5.9 million. Ark Invest has been offloading GBTC shares since October 23, which coincided with Bitcoin's rally towards the $34,000 mark. Still on Coinbase, a recent report by Kaiko shows that the exchange was one of the immediate winners, following Binance's record settlement with the DOJ. As you may recall, Binance, the world's largest crypto exchange by volume, agreed to pay a $4.3 billion penalty and comply with various regulatory requirements to resolve its legal troubles with the US Department of Justice, the CFTC, FinCEN, and OFAC. This news shook the crypto market, as Binance is a dominant player in the industry with a huge customer base and a wide range of products and services. Since then, many Binance users have panicked and are looking for suitable alternatives. This has driven many of them to Coinbase, which is seen as a more compliant and reliable crypto exchange. Coinbase has been enjoying a strong performance in the past few weeks, as its stock price jumped by 75% over the past month. As we mentioned earlier, this is partly due to the recovery of the crypto market, as Bitcoin and other cryptocurrencies rebounded from their respective lows this quarter. But it is also due to the perception that Coinbase will benefit from Binance's woes, as it can attract more customers and gain more market share. According to Kaiko, a data provider for the crypto industry, Coinbase has indeed increased its market share in terms of trading volume, especially outside of US trading hours. This suggests that Coinbase is appealing to international traders who are looking for a more regulated and secure exchange. So far, Coinbase's market share has increased by 34% since the whole Binance debacle. However, Coinbase is not the only winner in this situation. Another exchange that has gained a lot of market share is Bybit, a derivatives platform that offers futures and options contracts on various cryptocurrencies. Bybit recorded an even higher gain than Coinbase, with its market share surging by 50% in just a matter of days. So far, Binance has lost 4% of its market share as of early December. However, despite this loss, Binance remains the undisputed leader in the crypto exchange industry, with a market share that is more than 5 times larger than its closest competitor. That said, it is unlikely that Binance will lose its dominant position anytime soon, unless it faces more regulatory hurdles or major security breaches. On the contrary, Binance may use the settlement as an opportunity to improve its compliance and reputation, and to expand its presence and influence in the US and other key markets. Speaking of security breaches, November was a dark month for the crypto industry, as hackers and fraudsters managed to steal over $343 million worth of digital assets from various crypto exchange platforms. According to a report by Immunefi, the $343 million heist amount represents a 15.4-fold increase compared to the $22 million loss recorded in October 2023, and marks the highest monthly loss recorded in the crypto industry for the year. The report also reveals that crypto hacks contributed the largest share to this record, with malicious actors siphoning a total of $335.6 million across 18 incidents. Also, crypto frauds accounted for $7.5 million, recorded in 23 incidents. The report also shows that centralized finance platforms were the most vulnerable targets, as they lost $184.4 million across 4 separate incidents, representing 53.8% of the total losses for the month. The report attributes this significant spike to the hacks of Poloniex, HTX, and Kronos Research, which lost a combined value of over $132.9 million from 3 separate attacks. On the other hand, decentralized finance, or DeFi platforms, also experienced significant losses, totaling $158.6 million across 37 separate incidents, representing the remaining 46.2% loss. The report identifies Ethereum and the BNB chain as the most impacted chain, with a combined total of 34 separate incidents, accounting for 83% of decentralized applications on their platform. Layer 2 scaling solutions like Arbitrum and Optimism suffered 4 incidents, or 9.8%, while other smart contract networks, such as Avalanche, Phantom, and Heco Chain, witnessed 3 incidents, or 7.3%. These incidents highlights the risks and challenges that the crypto industry faces, such as security breaches, code flaws, human errors, and regulatory uncertainties. They also underscore the need for more vigilance, education, and collaboration among the crypto community, as well as the adoption of best practices such as auditing, testing, and bug bounty to prevent and mitigate such losses in the future. On a much brighter note, AntPool has agreed to refund a record Bitcoin transaction fee error. On November 23, a Bitcoin user made a costly mistake when they transferred 55.77 BTC, worth about $2.1 million at the time, but mistakenly paid a fee of 83.65 BTC, worth about $3.1 million at the time, setting a new record for the largest fee in US dollars for a single Bitcoin transaction. The transaction was mined by AntPool, one of the largest Bitcoin mining pools, in block 818,087. However, AntPool has agreed to refund the record high transaction fee, but only after verifying the owner's identity. In an announcement on November 30, AntPool noted that its risk control system temporarily froze the fee when packaging the transaction and invited the users to verify themselves before December 10, 2023. AntPool's directive for the victim to recover their fund was, number 1, to prepare a signing tool using either Electrum or Bitcoin Core. Both tools are used for validating transactions on the Bitcoin blockchain. Number 2, to use the private key of the affected address to sign the word AntPool using either of the tools mentioned above, and then send the signed text to AntPool's support email address. This way, AntPool can confirm that the user is the legitimate owner of the funds, and not a hacker or a scammer. But here's where it gets interesting. An anonymous X user going by @83_5BTC has claimed to be the victim of the $3 million fee, stating that their wallet was hacked. However, some users on X are skeptical about this claim, pointing out that the transaction was not a simple transfer, but a complex script that involved multiple inputs and outputs, and that the fee was not a typo, but a deliberate choice. Some users also suggested that the transaction could be a money laundering scheme, a tax evasion tactic, or a publicity stunt. Regardless of the true motive behind the transaction, AntPool's decision to refund the fee is a rare gesture of goodwill in the crypto industry, where transactions are usually irreversible and users are responsible for their own mistakes. That is all for the news this week. If you found our video informative, then please like the video, subscribe to our channel, and press the bell icon to get updates on all our future videos. Also, let us know what topics you would like us to cover next in the comments below.